The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. Tommy O'Brien with Tom O'Brien. We got Dow up 169, trading 24,870. You have S&P's up 15 points, NASDAQ up 56 points. Good morning, Tom.
Good morning, Tommy. How you doing?
I'm doing well. How are you?
Good. Well, the gremlins were eating into my computer. I just had to reboot, but I'm almost there.
Okay, perfect. Well, we got some positive action in the market, of course, and volatility in crude, volatility in gold seems like par for the course lately in terms of gold jumping around, but oil as well, just in the last hour and 15 minutes, right? Going from 71.20 down to below 70 and now back up to $70.65.
Yeah, and gold didn't dive off the bridge, off the cliff this morning, thank God.
Yes.
That's, and you know, what's intriguing here is that the dollar, okay, but it's not that the dollar is down a lot. And, you know, gold's trying to get back into, well, I can't say get back into a range because that range is so much higher that it has a lot more to do in order to get up to that. But I'm happy that we're not down $20 this morning. I can tell you that.
Sure.
Yeah. I mean, big time.
Yes.
Oil, yeah. You know, the oil market. It's like it seems it's still trying to figure out. You know, when we were on yesterday, the API numbers come out, EIA numbers rather. Bottom line is that we get a nice pop topside, and then as soon as we get off the air, man, they just smoked that thing. It was pretty amazing, actually. It
was pretty amazing. So it spiked, I believe it was 74.02 was the high right after 10:30. And in the span of 2 hours, I think it was below $70. There was at least $4 of movement to the downside. It was 2 hours, 3 hours, some 4 hours throughout yesterday, which $4 move with a 12 million barrel draw, right?
Yeah.
Pretty amazing. Yeah.
Huge numbers, no doubt about it. No doubt about it. Okay, so let's go into the, well, if we start with the S&Ps out here this morning, we're looking at, now I believe we got right next to, yeah, you know, the high of Monday out here in the S&Ps was 27.97. We've got to 27.91.50. See how this baby can handle it, you know. What we did have, and this is where we're going to, the market itself is going to release some good information for us today, is that on Tuesday we got to a high on the SPY with 51 million shares. We backed down yesterday with 77. It's going to try to get into that bar. The top of that bar is 279. We hit 278.44. The information I'm talking about is this. If we fail on price, and you do have a contraction of volume, what that's going to set up is we have the bank numbers coming out tomorrow. That would set up your probability that you're going to back down. If we hang up here and we come in with 60, 70 million shares, that's going to be saying that, hey, guess what? These bank numbers are going to come out and they're going to basically be good. So if we go and take a look at this JP Morgan, let's just take a look at JP Morgan. Yeah, it's not doing much right now. It's up 27 cents. Hey, we'll see where this shakes out, man. You know?
All those earnings, banking in terms of JP Morgan, Citibank, and I believe even Wells Fargo too, are all tomorrow.
Yeah. Oh no, the big numbers. You know. Well, let's put it this way: they moved these markets on Tuesday, and they moved them up good.
Yes.
So, you know, we'll see what ends up happening. If we do go over to the, let's go to the GDX. You know, so the GDX yesterday, that was big downtrend. Downdraft rather, and you had volume behind the move. Now, what we didn't do is that we didn't get to the lowest swing point. The lowest swing point in the GDX is $21.77. What I don't like is, you know, we went down to 21.94. We did 63 million shares. That's a big number, man. Now,
it's quite a spike on that chart with the volume. Yeah,
it's huge. It's huge. Now, what that was doing is that was coming into the highs of March 1st. That high there is 2164, and that was 59 million. And then what it's really testing is and this is the infamous February 9th day.
Sure.
February 9th, the high of that is 2168, the low is 2083. We had 101 million shares. So we got to 2194, and the high up there is 2168.
Okay.
So we'll see where it shakes out. What I don't want to see today inside the GDX is this baby, like, we're up 14 cents right now. I don't want to see this thing come in with like 20 million shares.
Yeah.
On a bounce, because what that would be setting up is that would be setting up lower price, man. You know, so
okay.
I want to see some action. I don't need price action as much as I need volume at these points. You know what I'm saying?
Yep.
So
nice.
Let's go inside the Dow Industrials, take a look at the Dow Industrials. And the thing that is amazing, actually, looking at this market, so yesterday what you had is this, is that we had, when the Dow pulled back, it was light volume. That being said, the S&P, the SPY, the SPY, the Qs, the IWM, all had volume in the pullback. Now, you see that a lot. That's divergence, okay? We'll see which way this goes, meaning that who's going to win out.
Sure.
You know, so the Dow today, you're up 158, leaders inside the Dow. Let's see what we have out here. That never stops, right? Boeing.
Every day,
oh
yeah.
Seriously. Now, this is not impressive in the aspect that the Dow is not up a huge amount of points when you can see, when you're looking at my screen, there's only 2 stocks that are in the negative at all. I mean, and we're talking about Dow, DuPont is putting 1 negative point in, and Coca-Cola's putting nothing. So
yeah,
when you look at that, number-wise, you have the Dow up, folks, okay? But when you spread it across the equities, there's not much juice there, you know?
Yeah.
0.6%. So we'll see where this baby shakes out, you know?
The day is young, right?
The day is young.
Yeah.
Basil Chapman. I gotta love it. That's what that's saying.
Okay, that's a Basil one? Okay, perfect.
Yeah, you hear it on the network, do you know what I mean? But well, let's put it this way. My perception is that's when, you know, over the years I've heard that.
Nice.
That I know exactly.
Nice.
So the dollar, you know, the dollar yesterday, dollar index gets strength, goes topside, and you know what we have out here today, it's hitting 28,000 contracts, and we'll see whether we can get that 28,000. You know, you're coming into the downdraft of the 29th.
Okay.
29th, you know, we come down, well, we didn't come down hard, but bottom line is that that was the first time that we actually had volume on the way down. We went from 95 to 94, 195. The bottom of that is 94, 195. The top is 95. That's what we're coming into now. So, 9,000 contracts is pretty good contract volume for this early in the morning, you know?
Yeah.
877-927-6648. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 154. Nasdaq's up 56. S&Ps are up 15. Gold's up $2. Silver's up 12 cents. Light sweet crude, flat, $70.73. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, everybody. Tommy O'Brien with Tom O'Brien. We got markets in positive territory. Dow up 160 currently. NASDAQ up 59 and S&P's up 16 points as we speak.
So, natural gas today.
That's right, man.
You think we're going to get the kind of volatility that we got in oil
That's
yesterday?
what I was just, you beat me to it, man. I was going to say, you think we can compete with what happened in terms of yesterday with oil? We will find out. I'm not sure. I'm not that optimistic for natural gas.
No, I agree.
Right?
And actually, you know, if we just talk about oil for a second, you know, because what we looked at yesterday, we looked at the 11s, looked at the 12s. I don't think that the 230s basically didn't line up, right?
They weren't as for that type of volatility trade. They weren't right next to kind of the strike prices.
Yeah. And what is important, folks, you know, when you're test driving the Nadex platform, is that you can see you do get moves like that. And when Tommy and I do these volatility paper trades in there, what you do see many times, okay, that those 230s line up too. And that's, you know, that's when you want to decide, okay, do you want to pay a few more pennies and premium to do something like that, right?
Yeah, no, definitely. And I pulled up the crude oil chart, and it's pretty remarkable. So going back to yesterday, here's your 1030 number. We do spike to 74.02. Let me get the bar. I know it's in there. So 74.02 is, there it is, right there, 1030 bar.
Right.
74.03, excuse me. And within the span of, by 2:15, we're trading under $70.
Yep. And 230s to close, folks. When you're trading those 230s to close, you know, for pit trading, and that's what these are trading off of.
Yeah. So you're talking about a $4 move in the span of about 4 hours. Pretty remarkable.
Monster. Huge.
So natural gas. Currently, we're looking at the August contract I have up here.
Oh, look at that. That's moving too.
We are trading at 282. We were down to about 280.5 this morning. And so let me clear out this crude oil. So we get the EIA natural gas numbers at 10:30. It's about 10:20 right now Eastern time. Jumping into the natural gas spreads, and so what we take a look at, right, is setting up a bullish and a bearish spread. Now on the 11 AMs, I'm just going to jump to real quick. We're going to get to use 280 as our point, so we're going to have to pay a little bit of premium to the intrinsic value to the bullish side.
Yeah.
Now let's just see where, before we jump around the noons. Yeah, they're going to have a similar price point, and even I'm guessing the 230s. Okay, because
They're all 280s. Okay,
yeah, all
cool.
280s, because natural gas, all things considered, hasn't had too big of a move to move away from where they probably set those strike prices. So all these trades, if you're trading both sides of them, are going to have a bit of a bullish bias to understand how they work, because you're paying for the intrinsic value. This spread has value between 280 and 20 cents, right? It's going to be $200 total because it's ticking in basically 1/10 of a penny. And so buying this, it's going to cost us about 22. Now, about 19 of that is going to be intrinsic value, right?
Okay, yep.
And then on the bearish side, this is going to be basically a completely out of the money spread, because we're about almost a full 2 pennies out of the money, and that one's going to cost you about 7. So the 11 a.m.s, you'll be paying about $29, or like 2.9 pennies, call it 3 pennies, away from 280 in either direction. You start to gain value. So not bad, considering especially that's where if you have a bullish bias, right, you only need to make up the $7 that it cost you really to buy the bearish spread, plus a little premium to the bullish side. So jumping over to the new ones, just to see how they price a little bit differently for that extra hour. Would have our bullish spread on the right, 280 to 3. That one's costing us about 24, as opposed to I think the 11s were like 22. And still about 7, because this is so far out of the money. And, you know, it's not so far, as in we were just almost approaching it this morning. But 2 pennies in one direction is a pretty decent move that's going to be an out of the money position. And let's just see how the 230s line up. So we had, about 31.
31, yeah. It's 29 and 31. 29, 11, 31 noon.
And what does change on the 230s now is that if you ever got a real big move, you have from 280 till 320. So they're 40 cent.
You got both happening, yeah.
40-cent spreads, and that's
time and spread, right?
Time and yes, and the size of that spread, right? And what's going to happen though is that you're not going to really pay much extra premium for that extra 20 cents because it's so unlikely. But it's nice to have if you don't have to pay for it.
Right.
And so that's going to cost you about 34.
That's pretty good. That's real good, actually.
Not bad, and especially I would say if you're a little bit bullish, because you know you might want volatility, but you really don't want 2 cents of volatility to the downside, right? Because that's where you come in at 280, which becomes our max loss right at this point.
Yes.
So if you're looking maybe for a move potentially in bullish direction, that trade sets up nicely. But the other side of that is maybe if you're just looking for the bearish spread, this is where really. You know, you're a little bit out of the money. You're 2 pennies out of the money, but you're selling it at $279.3, and you're putting up $7. And if you ever got a huge move, you have exposure down to 240, right?
Wow.
Yeah.
Seriously, man.
Yeah.
And what's going to be intriguing here, not that just because oil got a big move yesterday doesn't mean gas is, because gas seems to be in a different consolidation, but you know what? Energy is energy, man.
Hey,
so it's going to be
these directional trades too. I mean, that seems like a little bit outlandish, right? The risk reward. But man, I'm sure there was some great opportunities in the daily spreads yesterday to the bearish side, which it's not a bad trade when oil's at $74, $75, and we've already seen it oscillating maybe to the downside for those bears out there coming into the inventory number at 1030. I'm sure there were some people that benefited off of that with a $4 move to the downside.
That is, we haven't. I don't know what the stat is, but I think it's the biggest move in a year or two.
I would $4 in 4 hours.
Right. Right.
Just big time for sure. Yeah.
Yeah. Gotta love it, man.
Definitely.
And let me bring. I want to bring this up and just take a look at this for a second. So now this will be a delayed quote you're looking at, folks, because we get natural gas right now. Let's see. So this is 281 it's giving me.
And are you looking at the August contract just to be
I am.
perfect?
Yes.
Just making sure.
Yeah. You get 24,000 contracts. Okay. So yeah, that doesn't look to me like you're going to go higher. It's right in the middle of a range here.
Yeah. It's been quite the downtrend.
Yeah, it has. Right. You know, for some reason, that $3 mark is like problematic. Bottom line is that, well, actually, we stayed up there. No, yeah, it just stayed right at it. $3 and a 1 penny. It lasted all of 2 days, and then since the 28th of June, bottom line is it's been a one-way route all the way down again.
Yeah, and that's a great chart just to see the longer-term time frame, and that's why I say you know, you're going to have exposure in the 230s until for 40 cents of movement.
Yes.
But you can see that since January, we've only had a 20-cent trading range. You know, so having that exposure, that's why, you know, you're gonna pay very little premium for that extra movement. But guess what? Doesn't mean it can't happen when you're basically paying nothing for that extra 20 cents.
Yeah, that's a great point, though, because when you're looking at this chart, folks, okay, this is pretty amazing, actually. This is a 6-month chart, and it looks like from the very bottom of the spike, that's 269, and the top is 301.
Yeah.
So that's 32 cents for 6 months.
Yeah. Right.
That's pretty intense.
It is.
Stay right there, folks. Tommy and I are going to be coming right back with those gas numbers for you. We have the Dow right now trading up 167. Nasdaq is up 58. S&Ps are up 16.5. I believe the NDX 100 just took its eyes out.
Oh, boy.
So we're coming right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tommy O'Brien with Tom O'Brien. We got the Dow up almost 200 points, S&P's up 18, and we have natural gas with a little bit of volatility. And I'm jumping over to your chart, Tom. There we go. So I see stockpiles rising 51 billion cubic feet for the week, natural gas.
Yeah.
And expectation, there we go. So median estimate was a rise of 54, so pretty close in line. Nothing like the surprise that we saw yesterday with oil. But to jump back to the chart, the initial reaction is downward, that's for sure. These are 5-minute bars. This red bar is the beginning of that news coming in, and we're trading just above 282 coming into that number, Tom, and we spiked down to below 281. So a penny of movement real quick, but market kind of calibrating, trying to find its spot where it should rest.
Yeah, look at that, man. And you know, what does happen with these volatility trades, folks, the bottom line is that we're starting with the 280 point, so you want it away from the 280 as much as you can.
Yeah, and that's why, you know, when it's 2 pennies above, I like to say it takes on a little bit of a bullish bias because, you know, it's not a straight volatility trade because if you get 2 pennies of movement to the downside, you've now reached your max loss. So it does take on a little bit of a different trade. And that's where maybe, you know, why we pointed out, maybe if you're bearish, you always just could have had, and to pull it up, there's your bearish spread that you'd still need. You know, you're still almost 2 pennies out of the money, but you could have until 2:30 on those. See how the market moves.
Totally. So hey, we got to go over to this NDX 100. So
okay.
Look at this thing. So what you have here is that the oops. It looks like this is the takeover NDX of CA from Broadcom. And look at this. So Broadcom is the biggest loser in the NDX 100.
Yeah.
That's down 15%, or $36. But look at this. They're taking over Computer Associates. Well, it used to call it, now it's just CA.
Okay.
And that's up 18%.
Yeah.
Now, if we go into the NDX, what you're going to see, this is wild, man. So NDX just overtook its high. Its high, 73.08. You're at 73.24. We take a look at the Qs.
Yeah, I mean, I know Apple's up today for sure. I'm sure there's some others leading the pack up there.
Oh, yeah. In fact, man, Jeff just texted me. He just told me that Amazon, they put a new target on Amazon. Let's go look at Amazon. A broker dealer just put a 2,000 target on Amazon.
Wild. I remember when they were putting 1,000 target on it the first times I saw it, and the person wasn't getting laughed at, but it was definitely making headways. And the talk was, is this just to create a name for yourself and create $1,000 target? Right now, it's
I remember it so well. What you're talking about,
yeah.
Right? Because it sounded insane.
Yeah.
Right? I mean,
yeah.
And there you go. It's overtaking its highs out here. You got. And it almost looks like it's going to get the volume. It has a shot of getting the volume. It's 4.3 million shares it needs. Well, yeah, let's say 4.9. The other day, the next day was 4.9. You're at 1.2. Let's see who's. I'm not sure who's putting it on there, but bottom line is that you can see what's going on. It's a big number, man. Holy cow. You know, I got to get this. I was reading an article last night. I was going to get it for us this morning. But what it had, and it was in the Bloomberg magazine, and what it had is that the amount of businesses that Amazon is actually in, and in a large way, not in a small way. And it's like some of them, I don't think all of us really realize on a retail basis, the amount of businesses that they're actually in.
Yeah.
I believe it. Exponentially. Yeah.
I mean, they have the cloud computing, and they have all the goods. So they got all the computers and they got all the items, right?
Yeah.
Yeah.
And you know, in the business that we're doing right now, meaning that these tariffs are going in place, they're in a sweet place, man. Because if prices are going to go up, bottom line is that people will go look for more discount, right? I mean, if you're gonna, you pay attention to price most times anyway, but if prices start going up 5-10%, well, people are going to be basically looking for, how much more can Amazon cut?
Yeah,
They won't
It'll be
cut
interesting
from this
to
point.
see if
I'm just saying, I don't think they'll go up as much. That's all I'm saying. You know what I mean?
Sure.
Yeah.
It'll be interesting to see if that price war, because we've talked about it. I mean, the perception is that they're the price. They beat on price, but I'm not sure that that's a reality. We've had this before. They have this.
Right.
That's what the market kind of thinks, but that's because they used to, and then they've gotten where it's not quite, as in Walmart can compete, Best Buy can compete now.
listen.
They had to, and so they shaped up and got together, and yeah.
There's no doubt that once you get used to Amazon,
Right.
like yesterday, I ordered, and this would be kind of funny just checking this out. I ordered flings yesterday, right? Just to do laundry, right? I like those flings, right? And they were $19.95. So even at the break, I'm going to check that out somewhere else, and we'll see if that was a deal or not. Do you know what I mean?
Sure.
A big bucket of those flings. So
Are you talking about Tide Pods?
Yeah, exactly.
Okay, flings?
Right.
They're
They're
called
called flings.
They're
Yeah.
called flings. Okay.
Flings are cheaper than Tide ones. They're
Okay,
good.
I got you. Cool. No, that
But
works.
It's
There
the
you
same
go.
thing.
Right,
It's
sure.
the same thing. It's
Yeah,
the same
detergent's
thing,
detergent. I'm with you.
And what has happened, so where Tommy and I live, folks, okay, and probably plenty of you folks also, we have a central, where Tommy lives in particular, is a central, warehouse, right? So I had ordered these at 11 o'clock the night before, and they got delivered yesterday.
Pretty cool. No, I know it is. Yeah.
I know.
Yeah, we have a hub here, which is nice, and so
Right.
we get the rollout of a few things as they lead the nation, and
Yeah.
But what ends up happening is everybody else isn't far behind us, as in it's only a matter of time when we get something, and then I feel like it's moved out to the general, where Amazon, they don't slow down, man.
Do you know what Amazon, now this is what I just got, and I'm not sure whether I got this because we're a news outlet or I got it because I was a Prime member, right? I got yesterday a whole list of the new warehouses that Amazon is opening.
And where did you get them from?
Through the email, through my email.
From who?
And I still have it, so I'll look at it to see whether but I'm not sure.
Sounds a little spammy. No?
Oh, I don't know.
Is it a real one? No? I don't know.
Well, I think it's a real one. I just
Okay.
don't know whether, they were basically sending it to TFNN or sending it to me as a Prime member.
Oh, I see. That was from Amazon. Okay.
It was, yeah, but they were given the cities that these warehouses going to be opened.
Nice.
And like it was in the next week,
Nice.
There wasn't a lot of them, but there was a good 8 of them that were, basically big places. So
Nice.
the
Let's check back real quick on natural gas, all right? Just because it is
Yes.
jumping around a bit. So quite a spike. We spiked right down.
Oh, look at that.
Yeah, right down to a hair under 280 actually. So 2 pennies of movement, not in the direction you'd wanted it if you were making that
Right.
volatility trade because it was so far above. And that's why we like these to set up where, for example, if natural gas had been trading right at 280, right?
Yep.
Then you would need no directional bias whatsoever. But because the spreads started 280, you have natural gas trading at 282, you have value to the upside, the last thing you want is for it to spike down, at least and just hang at that level.
seriously.
Yeah.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now up 173. You get the Nasdaq up 66. S&Ps are up 17.5. Percentage-wise, folks, what you have out here, you have the Dow up 0.7, Nasdaq up 0.8, S&Ps up 5.
And we're coming back with Jack Gleason, too. We'll be right back.
Yes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tommy O'Brien with Tom O'Brien. We get the Dow up 167. S&P is currently positive by 16. NASDAQ positive by 67. We got NASDAQ 100 at all-time highs. Amazon at all-time highs. Quite a market. And this segment, we're joined by Jack Gleason from Major League Trading. Jack, welcome back to TFNN.
Morning, Jack.
Hey, guys. How's it going? I wasn't sure if the mic test went okay, so can you hear me?
You sound perfect.
Okay, good. Good to know. Yeah, how was your guys' 4th of July? I know I missed you last week, and I was up in Whitewater, Wisconsin, so I wasn't around.
We had a nice 4th. We had some fireworks. We had some relaxation and some sunshine, so it was nice. How was Wisconsin, man?
Got all your fingers and hands?
We do.
You
That's
guys got
important. All of them, man. We came back with that seriously.
And I had some great mortars, Jack. I still have some mortars left in my garage.
Big fan of the mortars. The louder the bang, the more the fun.
Oh, love them, man. Hey, were you selling oil all day yesterday, man?
Oh, yeah, that was all me. I was pushing that market down, me and my trade room, right?
Wow.
Yeah, we had a great breakdown off that oil inventory report in the prior day. I mean, I have no real support until 68.56. And a couple of resistance levels I'm watching, 71.59 right now and 71.22. 71.22's already had its first test. So I'd look for a first test at 71.59, but man, that thing it's about time it pulls back.
We were talking about it, just an amazing move. And so we're looking at that on the chart, Jack, and where does that 71.96 to 71.59, where are those coming off? Is that off of a retracement?
If it's not in the chart I sent you because it's just above and out of the frame, but pretty much we had the high of Wednesday to the low, traded the 50% retracements on Wednesday going into that oil inventory report right at that $74 level. That's where the sellers stepped in. And then obviously we had that exaggerated move to the downside, range expansion, volatility expansion. And when we get that, instead of taking the last high and drawing it to the low looking for a retracement, I'll begin drawing the low to the low, as I've explained before, or the high to the high. And in this case, the 38% retracement is 71.22, and that actually traded in the overnight session pretty much to the tick. You can see that reaction to the downside. Now, we could possibly not retest that 71.22 or even trade in that 71.59. That does give us targets down into 69.28. Now, that's just a short covering target, not necessarily support. I have zero support till we get to 68.56, which you can see on that chart I shared with you. I always like to look left of the chart and look at the last time we traded that price zone, and that was a consolidation zone right before we had broken out. So I'm looking at that 68.56 on the top end of that support, and then the bottom end of that range before we broke out is that 67.72. but downside all day, not looking for any support trades at this time in oil. But the good news is your friend gold, which we talked about last 2 weeks that I was on, the 1243. I didn't send you a chart there, but it was from 2 weeks ago. 1243.4 was that level. We traded that in the overnight session, so I'm hoping it holds on, because if it breaks that level, not going to look pretty, I think. So really hoping that for gold.
Jack, let me ask you, when you go from the highs to the highs and the lows to the lows with the Fibonacci expansion contraction, where did you get that from? When did you start doing that, coming off lows to lows, highs to highs?
I'm the only guy on the internet you'll find it with. So I mean, when I first started trading, I had a heck of a lot of time on my hands because I didn't have a job. I was in school. And so, obviously fibs, everybody knows about fibs. I mean, they're in every other technical analysis. And what I would do is I just began, I would just draw them everywhere on the screen until I figured out, until I figured out like where would be the best reaction. Because I would notice like after big moves outside of a range, like in the case where we had an oil, that, we wouldn't get that high to low. So I started looking at lows to lows, and then I just started seeing that there's got to be an algorithm here, because I'm not pausing the market as much as I'd love to, and I began to see the footprints of that algorithm, and I've been using it ever since, and that was probably in 2012. So awesome. I've been doing that for 6 years.
Right.
It's kind of the secret to my personal success. Every time I show somebody that, they're just like, man, that's crazy.
Well, no, screen time's important. I mean, what I love even when I'm doing my volumes, when you get big days, the highs and the lows are really important. Whether you're going up or you're going down of those days, they are. Because that's where the battles have taken place, right? That's what it seems like. So pretty cool.
Yeah,
so we're going to look at the
Russell, right?
Yeah.
Yeah, so that's a high-to-high sequence as well. Now, if you actually look at that, I call it my anchor, where my draw begins. Every time we pull back in from that high to the high, whether it was a high on that Tuesday or the following, we've actually held the 38 and 50% retracements. Now, this is the third time that this is traded. The Russell is the weakest market here today. We had a little bit of divergence. It was the only one of the four indexes to get that new low, but we came right into that 50% retracement. And now we're heading back down. So if we don't hold this, I would be very cautious below 1682. But as long as we continue to hold above 1682, maybe we'll check back to the lows of the 6th of June before heading higher. But this would give us, an upside target of 1730. However, we need to get through the 1709 to 1713 resistance level after I just have marked. Anytime we top out like that, I always just mark the general consolidation area, because that's what's hard to push through. But first test of that 82s, we rallied 7 points like that, but now we're coming into the second test, trading 1683.2 on my end. So
that's going to be cool, pretty cool watching, because we have the bank earnings are going to kick off tomorrow morning. It's like, the banks took us higher 2 days ago in a big way. So I'm looking for anything to basically give us more information of where these banks are going to be tomorrow morning, because they'll move the market. They will move the market. Just depends which way they're going to move
absolutely. What do we got? PNC, Wells Fargo, Citibank, and I think there's one more.
JP Morgan.
Yeah.
JP Morgan. Yeah. So that'll all be big news. And I'm kind of glad we pulled back over the last few days, because I knew if we, the way we were trading on Monday, it was like, this thing's going to the moon. And, if we didn't really get that pullback that we've had, I think Friday would have been ugly, because they would have rallied into, they would have had to come out with something fantastic for us to continue to Friday. So actually, I do think this pullback that we had midweek is healthier for the long side, because if we went straight up into the event, there'd probably be just a reversal on Friday. But now that we've had the reversal prior to the event, I think the Bulls have a better chance of a continuation going into tomorrow morning.
Yeah, no, listen, that's a good point, because last time Tommy and I were on the air, when all those bank numbers come out last quarter, how could they make any more money?
Record-breaking earnings, and the shares took a dive occasionally. Yeah.
Exactly.
Yeah. Banks are good at one thing, and that is making money.
Oh.
Oh my God.
They just get better and better. That's seriously.
More financial products, right, guys? Just, credit cards, whatever, short-term loans, you name it.
They have all the product you want, man. Well, Jack, thanks so much for coming on. Of course, Jack, everyone, you can check out Jack, MajorLeagueTrading.com. You have your name, your email, and receive some free videos over there. Jack, man, great education. Thank you for the great charts, all those good Fibonacci levels, and we look forward to talking to you again next week.
Have a great one,
Take
Jack.
care, Tommy.
Thanks so much, man.
Bye-bye. Stay right there, folks. Tommy and I are coming right back. We have the Dow up at 153. NASDAQ is up 58. S&Ps are up 15. We'll come right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back. Tom O'Brien with Tommy O'Brien. We got the Dow up 160 as we wind out the hour. NASDAQ up 62. S&P's up 16. And to check back in one last time for the hour on natural gas, right about 280. So we've had about 2 pennies in negative action, Tom. If we were taking both sides of that trade, though, 280 would kind of be your max loss there. You know, you maybe if you'd stretch things out till noon Eastern or 2:30, and you'd have some exposure. And again, that bearish side is just flirting with some value if you had a 2:30. So pretty interesting, but kind of not quite what you'd be hoping for just quite yet on those volatility trades.
And, you know, the natural gas, you know, as we said a little bit earlier, the spread hasn't been big. We've been in the same place really
the
for 6
trading
months.
spread you're talking about
Right.
isn't,
Yes.
right.
Right. So the world Poker.
Yeah, World Series of Poker. We'll do some updating there. So you got the main event final table reached last night, and they start playing that down tonight. There's no more wait for months. And
Really?
the big story that you'll see in there is they have a former champion, Joe Cada, featured here. So he has made the final table. He won it in 2009, I believe. And you're talking about fields of so 69,400 when he won it in 2009, and there's 7,800 this year. So if you could ever pull off those two, that would be quite the feat. But either way, and they're all guaranteed $1 million already making the final 9.
That's how that works. Wow.
Yeah, and then it goes up from there to 8.8 million. And then the other story kind of coming out of there, they have other events going on. Phil Hellmuth won his 15th career bracelet in a $5,000 basically turbo. So they have events still going on, and Phil Hellmuth, he's won the most bracelets ever, and he closed it out last night, won another one. Pretty cool.
So that's pretty wild, because I saw that, he's a mouthy guy, right? And
yeah, I'm not a fan of him as a person. You can't knock him for his poker playing, though. That's for sure. Pretty cool.
I love it.
Yeah.
Stay right there, folks. We got swim lessons coming up next. And I'm at Basil Chapman, Steve Rhodes, Dave White. We'll be back this afternoon. Tommy, have a great one and a safe one.
You too. Thanks, man.
Thanks, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.